Hi there, I'm Charles Goddard, and today I'd like to go through with you an Apple chart that is displaying a double bottom pattern, which is quite a reliable pattern. And I just thought I'd give you an idea of how we use these patterns in our trades, and that this pattern, amongst others, can be found in my book. That's I show a link for that at the end of this little video. It's just a couple minutes. So let's take a look. But first, a little bit about myself. There's a handsome devil on the screen right now. On the right hand side, you can see a list of financial designations that I've acquired over the years, and some of them took years to get. And combined with pretty close to 30 years total experience in the industry, I think that I'm well positioned to teach you about these things. So let's go take a look. Okay, so here's our chart of Apple, and you can see it's a fairly recent chart ending in December of 2023. And what we're looking at is a double bottom, which looks basically like a W. And it's a highly reliable pattern, and you should be keeping an eye open for these patterns. And I illustrate in my book a number of patterns, both Western and candle, that you can keep an eye out for. And when you see them, I give you an idea of what you should be doing in the book. And now in this case, I'll show you here. What we've got is we've got the pattern is formed, it's completed, and you can see a red horizontal line at the bottom, and that is the bottom of the pattern. I, I had a technical issue with my little drawing pen, so I had to put some lines on before we got here. But anyway, you can see the middle red line, and that is where we would place our buy at the top of the middle peak there, and that is our highest probability of profit at that point by entering there. And we put our protective stop down under the bottom red line, where you can see I've put a black squiggly line, and that's where our protective stop would go. Now we could also be more aggressive, and I've got a black line 2 or 3 candles up, and essentially once you've got 3 up candles after a low, you can consider that low probably anchored, and so you could take a more aggressive position and still put your protective stop under that bottom red line, and now you've got a bit more potential. Now we've got the luxury of seeing what happened, and it's a little different when you're operating in real time. So we have to act as though this trade may not work out or will not work out. So we have to protect ourselves, and so whether we put our buy just above the third candle up there, or we put it above the middle red line, we still have to put our protective stops in, even though this is a highly reliable pattern. Now, the red line above the top red horizontal line is an indication of the target from that comes from this pattern, and that is you can see the we've got the bottom red line, the middle red line that measures the pattern, and then the target will be that measurement on top of where we've purchased at the middle red line. Now I've been a bit conservative there, but we're looking at $10 in that first phase of this pattern. And what we would do is once we reached that target that I've got at the top horizontal line, we would then raise our stop loss to where we entered this trade. So we've now got ourselves in a risk-free position. Again, what happens next depends on how aggressive you want to be. You may want to reduce your position once the target has been reached, raise the stop loss up to a risk-free position and see what happens after that. So you've got some profit in your jeans, you've still got an open position, but you've got a protective stop that the worst case is you come back down to break even on the balance of your money, and then just see where the price takes us from there. And then when typically patterns evolve in multiples of the target, so the next time, the next rise of $10, you might want to take a bit more off the table and raise your stop up to the next level, the next $10 that we've seen. And now you've got a bit more cash in your pocket. You've still got an open position on something that may be on an uptrend, and you've moved your protective stop up to just under where you took your first level of profit. So this is really good with a stock like Apple that does trend both up and down, but it has the tendency to trend, so it's very useful in trading, especially when we've got some idea what we're looking for. So that tells us a little about our double bottom pattern there and how we would trade it. Okay, so I've given you a very quick look at a double bottom pattern, one that appeared, as I said, recently, and one that you could have taken advantage of. And it's one of the patterns in my book that I've got a link here for you to take a look at. I don't know if the click will be live or whether you can copy and paste this, or there may be a learn more button around here that you can click and be taken to the order form for this book. In the meantime, if you have any questions or comments, feel free to drop me a line at the email address I show there, and I'll be happy to answer them. And hopefully I'll see you again soon, and take care of yourself. Bye now.